Most companies are sitting on data worth millions and making exactly $0 from it. So what's the mental shift that separates CDOs who monetize from those who just govern?
The shift is moving from custodian to entrepreneur. A custodian protects data. An entrepreneur asks who else would pay for this and why. JP Morgan's data business generates hundreds of millions annually because their CDO team looked at transaction flow data and asked what a hedge fund would pay to see consumer spending patterns 3 weeks before retail earnings calls.
That's a significant competitive advantage. But most CDOs don't have JP Morgan's data gravity. Where does a mid-market CDO actually start?
You start with an asset inventory, but not a technical one. You map your data against 3 questions. Is this data rare? Is it timely? And does someone outside our industry need it to make a decision? MasterCard didn't build Spending Pulse by accident. They systematically identified that their transaction data answered macroeconomic questions that economists, retailers, and governments were paying consultants millions to approximate poorly.
So rarity and timeliness are the value drivers. But how do you actually package that into a product someone will buy rather than a data dump someone ignores?
This is where CDOs need to think like product managers. A data dump is not a product. A product has a defined user, a specific decision it enables, and a delivery mechanism that fits into existing workflows. Bloomberg Terminal succeeded because it didn't sell data. It sold the ability to make a trade decision in under 60 seconds. The data was infrastructure. The product was speed and confidence.
Let's talk revenue models, because there's a big difference between licensing raw data, building analytics products, and embedding insights into third-party platforms.
Exactly, and the margin profiles are completely different. Raw data licensing is low margin, high churn, and you're always competing on price. Analytics products are better. Companies like Dun and Bradstreet built entire businesses there. But the highest margin model right now is embedded intelligence, where your data enriches someone else's product and you take a revenue share or per API call fee. Verisk does this brilliantly in insurance. Their data lives inside underwriting platforms they don't own, and they collect tolls on every policy written.
What's the internal obstacle that kills these initiatives before they generate a dollar?
Legal and governance teams treating external data sharing as a liability exercise rather than a commercial negotiation. The CDOs winning this game bring legal into the product design phase, not the approval phase. They define what can be shared, under what conditions, and at what aggregation level before they go to market. So they're selling a pre-cleared product, not chasing approvals after a client is already interested.
One thing a CDO listening right now should do this week?
Pull your 3 highest volume internal data assets and write one paragraph on who outside your industry would pay for them and why. If you can't write that paragraph, you don't have a product yet, you have a storage problem.